The blueprint to becoming a profitable trader. Quite simple, yet not easy. Let me take you through it. Here we see the blueprint. We see all the phases with, at the end, we also have a special little surprise. This Notion, by the way, you can find it in the description of this video. You can just simply duplicate it to your own Notion if you want to. And the first thing we see is right here, fall in love with the process, but make sure it's really a process, because this is a big trap that we are also going to talk about, where it becomes an endless cycle. It doesn't become a process because people are not actually learning. Now, first things first, information phase. In the information phase, you need to find your mentor. This can be me, but again, it doesn't have to be me. As long as you find a mentor that you are comfortable with, that resonates with you, that is perfectly fine. As well, what I want to add onto here before we move on to the disclaimers, this step can be completely free. Yes, I have a mentorship. Do you need to join it? Absolutely not. You can become profitable just off of my YouTube alone. If you are in a luxury position, then a mentorship from a mentor might give you a shortcut, meaning usually it's about information you get there, how to implement that. So information plus implementation, which leads to an overall shortcut. So you pay for the amount of time you are going to save yourself. Now, to get that out of the way as well, why would I give you this information for absolutely free? And why are my videos, at least in my opinion, always that valuable for absolutely free? Well, that is simply said because I want to build the best educational company when it comes to trading. That has always been a goal of mine. And let's say I were to make the worst free videos right here, then people would not watch it. But most of all, people would not be profitable when they watch me. And when you are profitable because you watch my content, that is also good reputation for me. So that's a win-win scenario right there. Very simply said, very honest. So if you do good, I also do good. So my obligation is to teach you as best as I can. And if you do not think I teach in the best manner, then again, feel free to leave behind feedback, because feedback makes me improve as well. Now, following the next part right here, moving on to the disclaimer. In the disclaimer, we need to go over a few things first, where there is no holy grail. I want to ingrain this into your mind. There is no secret sauce in trading. There's not something that will give you 100% win rate. There just isn't. Then the next thing is, every concept out there works if you want it to work. So again, I talk a lot about fair value gaps. Do you need fair value gaps to succeed? I have seen support and resistance traders make more money than the so-called smart money concepts community. So it's very important to understand that every concept out there works if you want it to work. Whichever one are you comfortable with? Next thing is, like I mentioned, choose whatever your rational mind is comfortable with. The explanation of an algorithm of supply and demand is just to get you comfortable with the strategy you're using. We humans always like to have a logical explanation for something. And when that resonates or that makes sense, it's easier for us to believe in that. It's easier for us to use that. But I also need to say, don't get too caught up in this, which I'll go over later. Then right here, 9-to-5s are great and you should keep them. I'm not here to tell you, quit your job today, join my mentorship. No, keep your job. You have a lovely job, hopefully. And eventually the goal here is to potentially, if you want to, of course, move away from the job if possible. But quitting your job in the next few months, thinking you made it, let's not do that. Let's take the safe route right here. And let's actually stick to it for a few months, few years potentially, before we can actually look to potentially quit that job. Which is, at the end of the day, again, I can't give you advice on that. That's purely a decision you need to make as well. My advice is just don't quit too soon. There's no need, because trading strategies are also out there where you can trade it next to your 9-to-5. That's perfectly fine. Which as well links to the next thing, which is trading won't make you rich overnight. It's a skill. It's a skill that you can rely on and fall back on for the rest of your life. So if you are in need or you want an extra income or something like that, you can always rely on trading. When you master that skill, it's again a skill that you can use for the rest of your life. Moving on from the disclaimer again, I can only really vouch for my material, and that might sound very egoistical, but That's not my intention, because I know my material works, because I use it and it works for me. And I also see it in students that it works for my students. So in my experience, it works. So the route you can take right here is I actually have started a new YouTube channel right there, which we will upload videos on for complete beginners as well. After that channel, which still is in the making as well, you can move on to the A to Z guide. From the A to Z guide, you can go to Market Mastery. From Market Mastery, you can go to Arjo EO exclusive right there. How you should learn those materials is exactly what we are going to go over as well in a little bit. Now, the last thing in the information phase is the inverted thinking. And inverted thinking is a concept by Charlie Munger. You might know him. This is a picture of Charlie Munger, rest in peace, where usually people give tips on, all right, what should you do? I'm going to give you tips right here at the end of every phase, what you definitely should not do. So if you do not want to succeed, then you should do these things right here. That's the inverted thinking. I'll show you what it looks like. Where if we click on it right here, we see for the information phase, if you do this, you are definitely going to fail. You are definitely not going to succeed. With the first one being, follow the person that doesn't provide any value. So for example, if I love watches, if I were to only show off my watches right here and not provide any value, I would give you a day in the life. A day in the life, don't get me wrong, might be very nice, but if there's nothing valuable in it, then why follow a trader that does a day in the life? Maybe nice for a short or an Instagram for 50 seconds, but a full video on a day in the life, I'm sorry. I do not really care. I'm here to learn how to trade. And again, as well, if that day in the life is full of value, be my guest. Come at me with all those day in the lives if they are full of value. The same if you want to show your watches, want to show your cars. All right, that's perfectly fine as long as the video right there contains a lot of value. Otherwise, it just doesn't make sense. I'm not going to flex my watches all the time right here, because why would I do that? What do you learn from me flexing my watches? Nothing about trading. So that's also not our goal right here. That's at least not the audience I am speaking to. Next point after that is follow the person that doesn't give a step-by-step process. If you definitely don't want to succeed, then follow that person, because that's going to keep you in circles right there where you have no idea what to do. An ideal mentor, an ideal teacher, again, should give you a step-by-step process. Should be able to define things. That's very important. Next thing, focus on the algorithm cult and making fun of others. And this is something that I do not like at all. I despise this right here. Again, the thought process of there being an algorithm is not necessarily a bad thought process, as in it's not necessarily detrimental. I can somewhat find myself in that, but it can also go too far where only the focus lies on now trying to figure out an algorithm, trying to talk in these mysteries, these riddles, and trying to talk with a lot of eyes, etc. I'm sure you've all seen it. Then it becomes more of a cult thing. And the cult thing is as well when we start making fun of others, which is never the intention. Don't get involved in any of that negative behavior. Negativity right there is poison to your mind. If you want to make it as a trader, you should not be negative, in my opinion. And definitely don't look to disrespect support and resistance traders or someone that trades in a different way. There's no wrong way, there's no right way. We are against the market. We are not against each other. It's the same as the media, where the media tries to turn us against each other. No. We are in this together. We are in this world together. So let's make it a more positive space, right? Very important as well. From the information phase, if we see the blueprint, we can now see, all right, we are moving on to the learning phase, which on the Notion is sitting right there, the learning phase. In the learning phase, it's extremely crucial. What are you actually going to learn? What is your focus actually on? Because there's a lot of material out there. There's a lot of concepts out there. But that does not necessarily mean that you're going to be profitable, because there's a lot of things in the industry that make it overwhelming right there. So what do we actually want to learn? Well, we want to learn the foundational levels, which is the 5 foundational levels. The 5 foundational levels right there, as you might see, is a bias, a narrative, a context, an entry, and a risk management. Very simply said, summed up, those 5 steps right there, they lead you to a trade ID, where the first step towards a trade ID is a bias, is a direction right there. The last step is your risk management before you either hit stop loss, break even, or take profit. So every trading plan, whether it be support and resistance, whether it be supply and demand, SMC, whatever it may be, they all have these 5 steps right here. But the first step is the bias. So what do you need to learn for the bias? A bias defined again is direction doll. Doll is simply the target. Where are we heading? The draw on liquidity. Learn the concepts to determine your bias. I would advise, again, this is personal to you, right? Because what works for me or what I might like right here is not necessarily something you might like. So I would advise right here, focus on the next candle expansion and focus on fair value gaps. And focus on a maximum of 2 concepts right there that you need to learn to find your bias. And to find the concept that you want to use is very simply said, find the concept that resonates with you. So if I, for example, talk about fair value gaps and you find fair value gaps very easy to understand, then that is a concept right there that you might want to use. You like fair value gaps as well, making them easy to study. And when it's easy to study because you like it, makes it also easy to master fair value gaps. If you do not like order blocks, if you do not like mitigation blocks, then don't use them. If you find them difficult to understand already in the beginning, that's usually a sign that you should not learn it. Find the concept that resonates with you, learn it, study it, and master it. That is the goal right there. Then after bias, we need to move on to the narrative. And again, same thought process right here. We need to find concepts that we want to use for our narrative. So the narrative defined again is how are we getting there? So same in every trading plan. For example, support and resistance. Support and resistance might be bullish on price action. They will see a simple support line as the narrative. How are we getting there? Well, this last support, this last trend line, for example, is how are we going to get there? We might see PD raise, for example. So learn the concepts to determine your narrative. My focus here would be on timeframes. Learn to combine the timeframes in the correct manner. Then next to that, I would also focus on fair value gaps. Again, that's personal. After narrative, it's the same for context, entry, and risk management. So let's go through them really quick right here. Context right here. Context is the move from the PD ray to the PD ray. We have made videos on context. So if you're not too sure what that is, you can go to those videos. For example, the market maker model guide that we made in Market Mastery as well. Here, learn in which area we can take an entry where lower time frame PD rays will hold. So again, that context area is if you have higher time frame context from a weekly fair value gap towards the weekly previous candle high, for example. In that area, that is exactly the area where lower time frame order blocks, fair value gaps, etc. will hold. For example, this situation right here, when we are moving lower from this weekly fair value gap right there, this is the context area. That first candle low right there, the first PD ray that we encountered, the opposite PD ray. This is where on the lower time frame, if you again combine the time frames correctly, where the 1 hour right there will hold until we deliver towards that context low right there. And again, in combination with the right time as well, which overall leads to the market maker model inside that context area. The market maker model area is again where you can give your own twist to it. You can add your own understanding to it, which we are going to talk about in a little bit right here. And the next phase is entry. The entry right here is extremely important because the entry needs to be simple yet mechanical and also effective. So inside Market Mastery, we also went over entries. You can simply copy them and then turn them into your own understanding as well. But make sure right here that your entry pattern fits the 3 criteria. And the reason for that is because when we are about to have our entry pattern, we are about to click buy or sell, we are in an emotional state. That emotional state right here might disrupt our thinking a little bit. So to avoid that, we need to have a guide next to us that we can see, all right, I need to do this, this, or this. Very easy guide that you can simply follow as well. The last but not least, the most important, risk management allows us to be traders in the first place. If it wasn't for risk management, we wouldn't be traders. So always respect risk management as well because it gives us a job. And here we see learn the concepts that help with risk management. Risk percentage. How much do you want to risk? When do you want to lower your risk percentage as well? The more in drawdown, the lower your risk ideally should be. Then here, the RR, so the overall risk to reward ratio right there. Do you want to target a 1 to 2 RR, a 1 to 3 RR, 1 to 4 RR? Keep in mind, the higher the RR, likely the lower the win rate at first. And also, the opposite is true. The lower the RR, likely the higher the win rate. So find the perfect balance that fits you, that you like. Then, next is break even. So when do you want to go break even in your trade? Next one is stop loss placement. Extremely important. Learn the best places to place your stop loss as well. I've not added targets into this because I think if you are just starting out, it is completely fine to stick to a fixed RR first. It makes it a little bit easier. You can focus on the other things, minimizing your risk first before you get your targets absolutely perfect. Next thing right here, after we have learned the steps right there, and how we can learn the steps better is also done through case studies. And the case studies right here are probably the most important things you are ever going to do in your trading. Case studies and deep work sessions. So right here, what I've written down is exactly how I do my case studies, how I do my deep work sessions. But the first thing I need to find is a topic. So for example, when you are learning and you are learning about order blocks, about fair value gaps, and you are learning about bias right there, I tell you next candle expansion. What do you mean next candle expansion? Well, let me go to case studies right there, because the next candle expansion here in bias could be a topic. Where is the next candle likely expanding towards? How can I get more accurate in that right there? Well, let's take that topic right here. Where is the next candle likely expanding towards? Let's create a page from it right there, and we just do a deep work session on that. So how do we do a deep work session? The topic, we found it. You put on your headset, whatever it may be. If, of course, you want to do that, you can skip this step. If you don't like music during your deep work session, during your studying, it's perfectly fine. I like to use either Minecraft or Baroque music. So if you search for it on YouTube or Spotify, you will find what I mean right there. I prefer a little bit Baroque music myself. Then next thing we need is a chart. Then in that chart, we need to write down everything that comes to mind. So we want to study bias right there. And in bias, we are studying one of the concepts we want to use. Where is the next candle likely expanding towards? Well, how do I go about studying this? I have my music on right here. I put on my headset right there. I go into the chart, and when I go into the chart, I just simply start on the monthly time frame right here. And all I do is, well, how did the previous candle form right there? The previous candle was a down candle. All right. And then after that, after the down candle on the monthly, this down candle, we had another lower move right there, reaching for the previous candle low. Can the previous candle closure right there tell me something about how the next candle wants to form? Well, it's also very interesting that right here, if we look at this candle right there failed to close below that previous candle low right there. Then the next candle was an up candle, targeting the fair value gap right there. Okay, that's very interesting. And if you do this for the monthly, then going into the weekly, then going into the daily, you will start seeing patterns that you have never seen before. Why is this so important? When I talk about my trading, when I talk about the next candle expansion right there, I tell you my experience. My YouTube videos are basically my experience. I'm recording a video for myself where I'm explaining again a topic to myself. All right, let's remind myself, how was it again? And then I'm sharing it with other people right here on YouTube. So the thing you are learning from me is my experience, my thought process, but not your own thought process, not your own experience. And that's the key right there. If there is any secret sauce, this is the secret sauce, because you need to learn how to create your own understanding. And when you create your own understanding, even you can become a trendsetter, because a trendsetter right there is simply someone who created their own understanding, who thinks individually, who doesn't need to rely on anyone else. Learn about my experience. So what I would like for you to do is, when you watch a video of mine and you learn my experience, then go into your chart and do some case studies on it. And you will create your own understanding. You will not just simply copy my understanding. you will create your own understanding. Because again, you are only going to be as good as the person you are copying. To outgrow someone is to do case studies, to create your own understanding. If you want to outgrow me, then simply copying is not enough. You need to do case studies right there. Very important. For case studies as well, a small tip, you do not need to use the replay tool. You can simply go into hindsight and actually look at the chart right there. What happened? Replay tool, I would personally avoid it, and also have reasons for that, which we're going to go into later. So in the Notion, we can write down every single discovery that we come to. Now, after we do that for all these things, for the next candle expansion, for fair value gaps, for whichever topic resonates with you, because that's the one you want to create case studies for, then that will lead to a great understanding, an incredible understanding. I can promise you that if you follow these steps. Next to that is, again, the inverted thinking, the last step in this learning phase. In the inverted thinking, we again switch it around. So if we definitely don't want to be profitable, then we should do these steps right here. Don't create your own understanding, blindly copy. And this is a scary phase, right? Because I also tell people a lot that eventually you need to let go of my forecast, because if you're only copying my forecast, you will always be a little bit afraid, always a little bit scared. You need that validation, which is something I see in even bigger mentors. They don't tell you that. That's extremely dangerous, because someone is never going to create that individual understanding. They will never be profitable. They will always need to rely on someone. Extremely dangerous. So next thing, learn all the concepts in the world. Learn every single one of them. That will definitely guarantee you that you will not be profitable. I can guarantee you that. Then right there, make sure to actively use social media. And I mean a lot. And learn from 10 different mentors. So follow all the gurus right there online and learn from every single one of them. Make sure you learn every single concept as well. Get consumed by the social media. Watch every single thing they push out. Now, without joking right here, it's extremely important. I would always advise, and I advise this in the mentorship, limit your social media usage. Follow one mentor, follow him on your social media, and that alone. Because the other things are just going to distract you. They're just going to be a distraction, which we do not want right there. And I'll explain again later on why we do not want that distraction. And that goes hand in hand with learning all the concepts in the world as well, right? We do not want to learn all the concepts in the world. We want to pick a few and we want to master them. What is the saying again about Bruce Lee? I think it was Bruce Lee who said, "I fear not the one who practiced 10,000 kicks one time. I fear the one who practice one kick 10,000 times." And that's very true, because you need to stick to the basics and you need to master them. The concept that resonates with you, master that. That's crucial. Here, the next thing you definitely want to do if you do not want to be profitable is idolize your mentor. Idolize me. Make me your hero. Make me your superhero. Or a lot of other mentors out there, idolize them. Again, there's a difference between respect and idolizing. You can respect me. You don't need to be a dick towards me, but you don't need to idolize me. I'm not a hero. I'm just a human being telling you about my experience in trading, trying to help you. Idolizing limits your belief, because when you put me on a pedestal, you don't put yourself on a pedestal anymore. I want you to be your own hero. I don't want to be your hero. You need to be your own hero, because that's the only way how you can outgrow me. We can respect each other. That's perfectly fine. Nothing wrong with that. But don't idolize me. That's a very dangerous thing to do. Next thing is focus on drama. Focus on drama all the time. It's extremely entertaining, right? Entertaining, but not beneficial to you at all. So don't focus on it. We want to avoid it. Avoid negativity at all costs. If your mentor is getting involved into any sort of drama, I would highly advise ignore that mentor as well. We do not want to get involved in that. Your mentor should be a role model. He should or she should also ignore that drama and not get involved and throw that negativity back at the person who created the drama. Avoid it at all costs. It does not benefit you in any shape or way or form. Then from the learning phase, we arrive already at the execution phase. Now, in the Notion, in the execution phase right there, this is the most important step, because this is where most people are going to give up. And I see it over and over and over and over again. The first thing I've written down is nobody follows a trading plan if it's 100 sentences long. Simplify. We need to simplify. But I also need you to understand one thing. Simplifying is subjective. So whatever is simple to me might not be simple to you. Someone that is new to trading, I might talk abracadabra. Who knows? But someone that has studied ICT, has studied SMC, has studied all different concepts, fair value gaps, I might be very simple in the way I explain things. So simple should be simple to you, which means simplifying for me is defining things. When I am able to define things, that means I have simplified something. Because if I can't define things, I do not truly understand it. If you can't explain it to yourself in a simplified manner, then you do not really understand it, which is a lot of mentors out there don't understand their own concepts because they make it so complicated. If you can't convince, just confuse. Now, right here, we again have the 5 foundational levels because that creates a trading plan. Again, the 5 foundational levels create every step you need to get to a trade ID. So it's a full trading plan, essentially. You start off with a bias. So now you want to apply the concepts to get to your bias. Define every concept that you are going to use right here to get to your bias. The supporting videos right here for the bias and all these steps, we have gone over them in Market Mastery, in the A to Z guide. In every single video, I go over a certain concept. That concept can be applied in either one of those 5 steps or even in more of those steps right there. Choose the concept you like, learn it, then eventually apply it to your trading plan. When you are able to define it fully, that's exactly when you are ready for the next step right there. Now from the bias, you again do the same for narrative right here. You do the same for context, you do the same for entry, the same for risk management right here as well. I want you to be able to define every single concept. That's extremely important. So what does that actually look like in a chart? We start off with bias, and with bias, the first thing I do is I go to the monthly time frame and I try to focus on where the next candle is likely heading towards. What we are seeing on this candle right there is we are seeing a sweep of the previous monthly low right there, as well with a combined fair value gap, which we can potentially continue higher off of for a little bit. So we understand that this candle currently information already, which makes it even a little bit easier. We can understand right there that next candle, this candle can continue higher for a little bit. Then moving on to the weekly, we now find our drawn liquidity. We understand the direction. We understand it might want to continue higher. We need to find the target right now. And here we again have the same thing, fair value gap right there. I focus on the next candle constantly. Where does it want to head towards? Is the weekly agreeing with my ID? We came into this fair value gap sitting right there with the long candle right there. Tried to push lower, failed to do so. After that, when we come back above this candle, we can confidently say this fair value gap is too weak to push price lower. So what is then the next premium array that price can reach for? Well, we have a swing high sitting right there. So bias is done because we understand direction, we understand the drawn liquidity, the target. The target is this swing high. Now I need to find the narrative and the context. So narrative first, how are we getting there? If we are going higher, then where are we going higher from right now? And if we are going higher, where are we going higher from is a thought-provoking sentence. And the reason I do that is because I don't want 100 sentences, like I mentioned, in my trading plan. I want one thought-provoking sentence, like if we are going higher, where are we going higher from? To then trigger the chain reaction in my mind to think about, all right, now I need to take into account liquidity, fair value, order blocks, fair value gaps, mitigation blocks, etc. So all those sentences, those 50 sentences can be put into one simple sentence, a thought-provoking sentence. So if we are going higher, where are we going higher from? Do we have something on the weekly, a discount array that we can continue higher from? Ideally, a fair value gap. No. So I go into the daily. Do we have something on the daily right here? No. Close by, no, we do not have a discount rate that we can continue higher from currently right there. On the 4 hour, do we have something more clear? Well, on the 4 hour, we actually had this fair value area right there with a fair value gap sitting right there as well. We came into the fair value gap, tried to push higher, failed to do so, came into the fair value area where eventually we pushed higher. So this is the discount array right here. So what is the next premium array? Well, we have 4-hour candles, which are already close by, but I now want to target these swing highs. Those are the next actual premium arrays. I understand where we want to continue higher from, fair value area, and I understand where we can push towards the next premium array, the closest premium array, which creates the context. Because in this area, again, is where I can now look for my entries. So on the 1 hour right here, for my entry pattern, all I need on the 1 hour here is simply a fair value gap higher. So a fair value gap right there got confirmed with the third candle, that candle closing. That for me was in itself already an entry, which when that entry happens, I know where to place my stop loss. Stop loss goes below the lows, I can cover the bodies. I target, in this case, the highs sitting right there. And this is actually a trade that I took as well. Why do I target the highs? Simply said, because it's a context highs. Risk management, stop loss placement below the lows right there, because price has no reason to return there anymore. So my stop loss placement is also where does price have no reason to return anymore. That's where I want to place my stop loss. If price wanted to continue higher, it should have always respected this low right there before it reached the highs. Break even. Well, when does price have no reason to return anymore? Well, at this moment in time, we still had quite some opportunities to return, and we actually hit take profit right there before we might have even got the chance to go break even. But if you understand the fair value video again with the fair value gap, and if we were still in this trade targeting higher, then this right here would be a good place to go break even right there once we create the fair value area with the fair value gap as well. Risk percentage, what do I actually want to risk on this trade? Well, am I in drawdown? Am I in profit? That's all things that we need to take into account to determine my risk percentage. So the more I am in drawdown, the lower my risk. So if I am 4% in drawdown, for example, which might happen, I usually risk 0 to 5%. If I am in profit, 1% profit, I like to risk 1%. And when I build my profit, depending on the account, which we'll go over later, I also can risk 2%. And that is exactly how you go over all the foundational levels right there for your execution phase, for your trading plan. Again, for me, it was very simple to go over it very quickly, right? And it's not the main idea for this video. So if you want to go over the full details on the foundational levels, then after this video, you can watch other videos as well. But you need to create your own understanding, because when you create your own understanding right there, you will also make it seem very easy when you go over those 5 steps. Next thing after the foundation levels is also important to understand conditions. My trading plan works better in certain conditions than in other conditions. What I determine eventually to be high probability conditions and low probability conditions. So also when you start to trade, you need to determine in what kind of conditions your trading plan works best in. So for example, in trending conditions, my trading plan personally works very well. But in Seek and Destroy, it's like, it does not work really well. So I might have a different trading plan right there for Seek and Destroy. But I know this trading plan that I just showed you does not work the best in Seek and Destroy conditions. How do I know that? Gathering data. Very simply said, gathering data is oftentimes an overcomplicated thing. Gathering data is just simply taking a trade, seeing what it did, in what conditions was it a loss or a win? Can I improve something? And over time you see the data and you think, all right, I take losses in similar conditions. Perfect. So I want to avoid those conditions. Same goes the opposite way. I always take winners in London kill zone, for example. I want to trade more of London kill zone, or I can increase my risk as well. Very simple said, that is data. You don't need to overcomplicate that part. Then after the conditions, we move on to psychology, probably the most important part about your trading. But it's only important when you have finished the technicals, because we can't move on to psychology and we can't blame our psychology when we don't even have a trading plan set yet, which is something you need to understand, because I refer to psychology a lot. But in order for us to refer to psychology, we need to understand the technicals first. And before I dive deeper into psychology problems or obstacles that we might have, I want you to know that you should always have a long-term vision. So getting profitable overnight, getting profitable tomorrow, next month, it's too short. Think all right, if I can be profitable in the next 5 years, I will be happy. And does that mean you need to take 5 years? No, but with that mindset, it's likely going to happen faster than if you say, I want to be profitable next month, then you're going to be disappointed next month. It's going to take another month and another one and another one. Then you're just counting the months. If you can take that long-term vision, then it will likely happen extremely fast, faster than you think, faster than you expect it to be. And this helps eventually when you do run into fear of missing out. You close your trades early, things like that. Then you know I have a long-term vision, so I can overcome this in the long term as well. How to overcome that, how to overcome those obstacles is what we're going to go over as well. Then the next thing is record yourself. So whenever I'm in a trade, or I used to do this actually a lot, and even on my trading view, you can see if I go to the IDs here on the right side, you can even do it on trading view itself actually. Then right there for my IDs, you can see I record a lot right there, even before I did anything with YouTube. You might argue, well, this could have led me to eventually doing YouTube right there, but this was purely for myself. This was purely recording myself, my trade breakdowns, but also my trades. As in, if I'm taking live trades right here and I'm about to trade, then I want to record myself because I want to talk to myself. It might seem very odd at first, but believe me, this is going to help you a lot. Because when I'm about to take a trade right here, and I want to trade that sweep right there, I want to continue lower, 15 minutes for valuables lower right there, I want to place my entry right there. Let's say that that is my trading plan. Eventually, if I record myself, I can see if I actually stick to those things. And when you record yourself, it feels like you're talking to another person as well, making you have some form of accountability. I am not going to talk myself right here and say, I am now going to move my stop loss right there a little bit lower. I am now going to remove my stop loss actually. Because when that thought comes to mind and you actually say it out loud, you're like, I'm going to remove my stop loss. What are you talking about? It's like you get a reality check. So it's very important to keep yourself accountable. And after you record yourself, of course, you can also check the tape. You can check the tape and you can study it. See, where can I improve? What went wrong that I didn't notice at that time? This is extremely underrated. And if you are struggling with psychology, I would 100% recommend recording yourself. Just again, you can download this for free. You can download OBS for free, OBS Studio. The microphone doesn't have to be used as long as you are talking to yourself whilst you are trading. Now, before we dive deeper into psychology as well, I want to go over again the inverted thinking. If we definitely want to fail, then we need to have a 200 sentence trading plan, extremely detailed. We need to write down every single detail. Writing down every single detail is not bad for your studying. It's great for your studying, I would argue. For your trading plan, no one is going to read through a 100 sentence trading plan before they dive into the trading day. You might as well skip the trading day then. Before you're done with reading the trading plan, the trading day is over. A trading plan should be simple and defined, knowing exactly what you are going to do. How can we avoid those 200 sentences trading plan? By having thought-provoking sentences. Now, I can understand, I've also been there, where I started off with a big trading plan, the huge trading plan. Again, it's not that bad to eventually refine that. So if you start off with a super big trading plan, all right, not too bad. We can refine that. We can slowly look to incorporate 2 rules maybe into 1 simple rule. That is eventually how I got as well to, for example, SMT. I don't need it in my trading plan because it's already incorporated into my trading plan. I'm combining multiple rules into 1 rule. That's how you get to defined small trading plans, simple trading plans, for me at least. Then next thing is keep it vague. Don't define anything. And I think this speaks for itself, right? Always look to define things. If I'm just talking in riddles and stuff, that's annoying. It's annoying for yourself. It's annoying for me. It's just annoying. Define things, simplify things. If you can't define things, then usually you don't really understand it. Next thing is take 5 trades a day. Take 5 trades a day when you're just starting out and look to trade the most possible amount. And whilst you do that, also focus on 100 instruments at once. Trading on that trading day, a lot of instruments at once. Constantly like on TradingView, flicking through your pairs. So like this, I'm now seeing Australian dollar, US dollar continuing lower. Let me see what GU is doing. GU buys right there. Let me see what the dollar is doing. Well, buys on the dollar right there. This will just confuse the absolute crap out of you. And next to that as well, you will get very impulsive, most likely, because you will see an opportunity maybe on US dollar JPY. Is it a great opportunity? No, because you're just flicking through pairs on a 15-minute time frame without any context, without any bias, any narrative. So you're getting tricked into the market right there. So whenever you find a pair that you want to trade for that day, stick to that pair. Stick to that instrument for that day. If we are talking about multiple trades a day and we are swing trading, position trading, so 1 hour, 4 hour entries, it's a little bit different. Then you can allow yourself to do that as well. Now, if you don't want to succeed, definitely do the following. Never pay attention to the higher time frame. You don't need to pay attention to the higher time frame all the time, but at least have an understanding of what it is trying to tell you, what it is trying to do before you dive into the lower time frame. That can only benefit you. Next thing is, when you lose, start back at information. And this leads me to the trap. The blueprint you see right here is not your typical blueprint, because the blueprint here is cut in half. Now we are moving from information to learning to then execution back to information. What people tend to do, and why this is the biggest trap, is because whenever people have the information, they learn something, they now execute, and they take one loss or they take a string of losses. They are not looking to learn from those losses. No, they are looking to learn from an external factor again. So they start back at information, meaning they are strategy hopping. They are shiny object syndrome traders, which is where the trap comes in right there. And when we talk about the trap, I mean this. If you do not break out of this cycle, and that's exactly what I meant with fall in love with the process, but make sure it's really a process. A process is constantly improving. It's not shying away from obstacles. It's not being afraid of that. If we are being afraid of obstacles, then we will turn into the trap and we will start back at the information phase, learning, execution, back to information, learning, execution, and we will be stuck in an endless cycle. The trap is overcome the trap and you win. You are going to fail, but how you react to that failure will determine if you become a loser or a winner. This is the shiny object syndrome. The biggest virus in the trading industry. This is what is keeping 99% of the traders unprofitable. I have seen it over and over and over again. A Twitter trader or friend even that I knew was trading some kind of strategy, doesn't matter which strategy, was seeing some success with it, all of a sudden is now switching to the other side, all of a sudden a complete different strategy, which had nothing to do with the previous one, which is when they fell into the shiny object syndrome. You can see this over and over and over. Whenever there are low probability conditions in the market, then usually what you'll see on Twitter is a new trend starting, or on Instagram or YouTube even, a new trend starting. Someone that comes up with something and tells you, you need to use this theory or this exact secret concept to be able to be profitable. And that in itself is not too bad again, but the people that fall for it are usually shiny object syndrome traders. So when you have found your mentor, stick to the mentor. Give him or her time. Give yourself time. Otherwise, you're just going to be stuck in this cycle. And the cycle is that on the left side, we see progress right here. The higher we go, the more process we make. At the bottom, we have time. So the further to the right there, the more time is passing. The green lines that we see is a normal learning curve. Whenever you start learning right here, you might have some ups and some downs overall, which are those obstacles where you need to start learning. But overall, you are learning more. You are making more progress when you stick to the same thing. But right here, shiny object syndrome is when we make progress, we start off with, for example, learning from me. And all of a sudden, there comes a Twitter guru, an Instagram guru, YouTube guru, or another mentor. And we think, oh, look, a new idea, a new shiny object. And then we start all the way at the bottom again. Because you do not use the previous knowledge that you had. No, you use the new knowledge that you acquire in the information phase again. Then you go to the learning phase. So you start all the way at the bottom again. It's like switching from basketball to football, where you might take some experience with you, but you start all the way back at the bottom, where someone that just took the time, that has the longevity to stick to something, will always be further in their trading career than someone that is constantly switching from one thing to the other thing to the other thing. And literally this, it's mind blowing actually. This is the craziest thing to me, because if you can overcome this, then trading will be so simple and easy. All you're doing after this is failing, learning, and you learn from your own failures, from your own losing trades, etc. When you come against an obstacle in your trading, ideally you want to find the answer yourself, because then you create again that individual part of trading that you need, not being reliant on anyone else. Again, it's the same, I think you may have seen it as well in your own trading, where if you're in a Discord community, for example, it's all fun and games, Discord communities, but they can also be very triggering for shiny objects in their traders. Why? When you take a loss, another person might say, oh, wow, you didn't see that loss coming? I use times and I avoid those losses all the time. Then you might think, oh, okay, I need to learn about those times. Well, when you learn about them and then you take another loss, and then another person comes again, oh, you didn't learn about this concept? Well, you should really learn about it because you'll avoid all those losses. And the same thing happens over and over and over. When you are learning in trading, you eventually need to become your own mentor. I have mentioned this multiple times. I learned the basics through ICT, and afterwards I learned from myself. I was my own mentor, and I'm very proud of that, because that is how I got to this position where I made certain discoveries in price action. I'm not claiming to be the owner of any of those discoveries, because I'm certain other people that study charts also made those discoveries, but I was confident enough in my own knowledge, my own abilities to go into the chart myself. And I'm also a very stubborn person, so that might also help a lot. But I find the answers myself if I do come across a problem in my trading. That will benefit you a lot. I promise you that. Now, if you do not overcome this trap, which will happen to a lot of people, they will start back at the information phase. We here, of course, overcome the trap eventually, which takes a lot of mental strength as well. After that, if we stick to the original blueprint, we see the obstacles again. And when we dive into the obstacles in the Notion as well, we now need to face our obstacles, which is again where the learning truly happens. From the learning phase towards the execution phase, that's quite a short amount of time. Learning in trading does not take that long, meaning I can teach you the technicals probably within a good month. You understand the basics. Within 2 months, you have a good grasp. Within 3 months, you probably understand most of it. After that, you need to face your own obstacles. Ideally, and what I'm about to say, not financial advice or anything, but from what I see in students, from what I noticed in myself, I wish I did it sooner. Get into live trading as soon as possible, because you will find a lot of obstacles that you will have to face, and you will learn a lot from it. Believe me, that's the best learning experience you can have, diving straight into it. And again, it doesn't have to be a crazy account, right? It can be as minimal as you want it to be. It can be the $10, whatever it may be. As long as you risk something live, that will make it feel a lot more real, and you will learn to face your obstacles, and you will progress a lot as a trader. Skip the backtesting phase. Because in backtesting right here, if I use the replay tool, I can just skip and skip and skip. And if I take a loss right there, then I might skip ahead again and I can just take a new winner. It's not even close to real trading. In backtesting, it is, again, great if you want to get to know your trading plan. So maybe one backtest session, but usually people tend to get stuck as well. And this is another cycle in a backtesting cycle where all they do every single day is backtesting. They take a loss, let me backtest again. When you take a loss, the solution is not backtesting again. The solution is putting on a new trade again, learning from the experience, and then live trading again. There's the only way you'll learn, not through, again, going back into your comfort zone and backtesting, because backtesting is a comfort zone. It's very comfortable. Same as demo trading. It's very comfortable. I can't lose anything. Feels like I'm learning. But at the end of the day, you're not achieving anything, and you're not actually learning as much as you can in live trading. And again, live trading doesn't need to be a crazy amount of money. Whatever you can afford, not financial advice. Keep that in mind as well. So let's go over the common obstacles before we can go over how to defeat or overcome those obstacles. The common obstacles are trading every day, the need to trade every day, because we think, especially when you are coming from, well, from just being a human being, because every human being has the urge to work hard, meaning you should work every single day, meaning you should put on a trade every single day. That is the furthest from the truth in trading. Less is more in trading. Again, leads me back to the overall conditions that you are trading in, where eventually you will come to the conclusion certain days are higher probability for you than other days. So those days that are not high probability for you, you might want to avoid, where you do not trade at all. Everybody in the world that trades has high probability condition days or low probability condition days. If you claim that you do not have the difference between high probability days and low probability days, then you do not have enough data. You have not traded for long enough. There is nothing wrong with skipping a trading day. You do not need to trade every day. Next thing is, my strategy does not work. This is a thin line because you might just have learned a really bad strategy as well, right? When you start using a strategy, it's very important to understand it's likely going to be mechanical, so fully objective at first, because you have no experience yet, you have no intuition yet. So you do not know what to expect from the trade, from the charts. But the first time you start using a strategy, you start using a trading plan, it will likely be very mechanical. That's perfect, because you need those guidelines to stick to a certain plan. But you do not have the experience, you do not have the intuition just yet to know what is a bad trade, what might be a good trade, etc. You're just a robot. You're taking every single trade idea that might be there, leading to a lot of losses at first. A strategy is always going to lose a lot of money, most likely at first. Of course, depends on strategy, depends on the person. But it's great to have that mindset where strategy is not going to be perfect straight out of the gate. The perfect part comes when you build experience, when you build intuition, the subjective part of your trading plan. That can only be done by applying the mechanical trading plan over and over and over until experience takes over. What do you need for experience? Time. You need chart time. So you need to fail over and over and over to actually learn from your experience where your trading plan, your strategy becomes better. There's not a strategy out there that you can simply apply right there and you can click buy or sell where you will instantly have the best strategy, the best trading plan ever. Does not work. The best trading plan and the best strategy ever is when your experience starts to take over, which can only be done through time and overcoming obstacles. The next thing is asking others why you lost the trade. I am extremely stubborn and I'm a very stubborn person, but that also led me to a lot of trading success, I believe, because I do not ask other people, hey, why do you think I lost this trade? Why do you think I did this? When you have a mentor, don't get me wrong, this might be great in the beginning to give you an idea, to give you a head start, which can be absolutely perfect. Don't get me wrong. But eventually, you don't want to ask other people why you lost trade because they will always have something to tell you. Oh, you didn't pay attention to this, to this, to this, to this. That will again trigger that shiny object syndrome, which we do not want to trigger. So find the answer yourself, if there even is an answer, which I get a question a lot of times from people that take a trade, they might take a loss. And they ask me, Arjo, why did I lose this trade right here? Well, sometimes it's just a loss. It's just probabilities playing out. You don't need every trade to be a winner. There doesn't always need to be an exact reason on why you lost a trade. It's always going to be probabilities. The market is probabilities. It's not 100% guaranteed, which is why the market isn't random is an extremely dangerous thing to say, because then you trigger people to ask you, hey, why did I lose this trade right here? Because if the market is not random, there must be a reason for my loss. Sometimes it is better to just accept the loss and move on and focus on the next potential trade ID instead of reminiscing about the loss you took right there and driving yourself crazy, eventually leading to incorporating new concepts, which you do not want to do. Next thing is FOMO, fear of missing out. With the same psychology things as well here, not letting trades run, closing early. These are all things, obstacles that you need to overcome with time. And again, I'm sorry, but there is the same as the technical analysis. There's not a secret sentence that I can give you here, and all of a sudden your FOMO will magically disappear, which a lot of people are seeking for that. And I was also seeking for that. Don't get me wrong. When I struggled with psychology, it was like, who here can tell me that secret sentence that I need to hear in order to overcome my FOMO? FOMO, you overcome it with time. You overcome it with confidence. How can you build confidence? Confidence comes with experience. The knowing that your ability is always going to be there, that you can actually trade. Your strategy, when you start using it, you're likely not going to be very confident in it. Why not? Well, you just start using it. It's like you just met someone. You're not going to build that trust immediately. It needs to be built over time. So when you do not let your trades run, you are not confident in your strategy just yet. So eventually, a very simple solution is seeing it play out over and over and over again. Experience that pain of, I wish I could play back the time a little bit and just hold that trade. And then eventually you will be confident enough because you've seen it over and over and over. You've experienced it over and over and over that your trade can run, which is the exact same thing for closing early. You are not confident yet. Confidence comes with giving it time. There's nothing wrong with that. Those are all normal errors that we make as traders when we are just starting out to use a new strategy, a new trading plan. But we need to give it time. We don't want to, again, start back at the information phase. Next and the last thing here, of course, there are a lot of different obstacles, but we want to go over all of them. Well, we can do it in the live stream, but not right here. The video would be 5.5 hours, probably even longer. The mandatory losing curve. The mandatory losing curve is the following right here. On the left side, we see our equities. We see our account balance right there, which starts at, I've just picked 10K. Then at the bottom, we see right there where there's actually nothing. We have the amount of trades that we have taken. So the further we move to the right, the more trades we have actually taken. When you start trading with a new trading plan, a new trading strategy, it usually starts like this, where you immediately jump into the losses right there. And slowly you can learn from those losses. You can face your obstacles where you will be a break-even trader. You will take some winners, some losses right there. You'll still be in drawdown. After a while, and if you give it enough time, you will climb out of drawdown and you will be a winner. If you stick to it, you will be extremely good actually. Now the mandatory losing curve tells you that you need to go through a break-even, a losing and a winning phase before you can win even more. And what I mean by that is this is one losing curve right there. But another losing curve is if you start winning right here with a new trading strategy, you might be very euphoric. But don't forget the mandatory losing curve is around the corner. Where this might, for example, be your phase 1 and phase 2 of your challenge account. And all of a sudden, when you arrive at the live account, this happens. You start losing and you feel like, what is happening? The trading plan does not work. The trading strategy does not work. No, you don't work. And what I mean by that is you have not gone through the losing curve just yet, the mandatory losing curve. The mandatory losing curve and the way the market works, it punishes your faults and your errors. So it turns you into the profitable trader eventually and allowing you to be profitable. It's like a puzzle where every piece of the puzzle is coming together. Profitability is not a crossing the line, I'm all of a sudden profitable. No, it's constantly learning from your mistakes, learning from your failures to eventually be better. And then when you become better because you learn and you experience things, you will start winning right there. That is the mandatory losing curve. Very important, because do not be surprised if you start losing right out of the gate or if you start losing a little bit later. Those losses are going to happen. I can promise you that. Now, from the common obstacles, I have also created a journal right here, which you can use. And in the journal, you will see the calendar. So currently it's Friday right there. And you can add, by clicking on the plus right there, you can add an item. By adding an item, you can name this FOMO. You can name any obstacle that you are currently struggling with. Then the obstacle right here, you can name it again right there. So again, FOMO, is it solved right there? You can check it off if it's solved. If not, then we uncheck it again. It might be a longer term obstacle, right? That we cannot solve immediately. That's perfectly fine. We can solve it later on because it takes time. Then right here in the obstacle as well, when we click on that template, we see a few questions. And the questions I want to go over is describe the obstacle right there. Write down the positive learning experience. Again, having a positive mindset, having a growth mindset. And a growth mindset is every setback is something that will make you grow. It's a positive learning experience that will allow you to be better every single day. If you think everything that comes your way and every obstacle that comes your way is negative, then it will always be negative and you will never be profitable. You never achieve something. If you are on the path to becoming a profitable trader, then every obstacle that comes along your way is trying to teach you something. It's trying to make sure you have that experience under your belt before you actually start making money. So every learning experience is positive. There can never be a negative learning experience, never. So write down the positive learning experience that you can take away from having FOMO. Oh, I need to have this FOMO so I won't have it later on when I am managing a lot of money in my account. Next thing is, how can you overcome the obstacle? Sometimes, again, like I mentioned, all it requires is time. So do you have an immediately fix? No, sometimes it takes time. Well, a good thing is to check, do you have your technical trading plan set in stone? Because sometimes FOMO, letting a trade run or closing a trade early, not letting a trade run, also comes from not understanding your trading plan, where you do not have rules to go break even. You do not have an entry pattern that you can stick to, which is simple, effective, and mechanical. And that can also lead to FOMO, where you do not actually know where to enter. If the technicals are right, then it truly is our psychology. And when it is our psychology right there, then we can overcome it by improving with every single trade and being disciplined. Being disciplined in every area of life as well, not just trading. And then with time, if you also record yourself, you will improve and improve and improve and improve. And eventually the FOMO will also go away. It's not rocket science. Then this is what you can do for every single obstacle. And also a good positive reminder right here. You are better. You are better than going back to that information phase. You are great. You are your own hero right here. And we need to overcome all those obstacles to become profitable right there. Very important. And eventually, when this calendar is filled with all kinds of obstacles, perfect, because then you have a great view of how much progress you have already made in your trading. That's absolutely perfect. It's the most beautiful thing to see. So please show me all your calendars with all your obstacles that you are facing. That's beautiful. After that, of course, we arrive again at the inverted thinking. So what do we do in the obstacle phase if we definitely do not want to succeed? Obstacles are negative. They're negative. We only think in a negative manner, and we always think there's something wrong, which again, I've written it twice right there. Be very negative, extremely negative right there. If you are always negative, there are more negative things happening to you. If you buy a new car, then all of a sudden on the road, you see that car everywhere because you are paying attention to it. If you always pay attention to positive things, then every single day there's something positive happening to you. Always be grateful because in the long run, that pays out. I can promise you that 100%. Seek for positivity and you will find a lot of positivity. But again, seek for negativity, you will find a lot of negativity as well and you will never improve. I don't know the answer to my obstacles. That again, you know the answer. You just need more time to think about it. You know the answer. You do not need an external factor necessarily to help with an answer to your obstacle. Of course, it might help. If you have a mentor, go ahead and ask that mentor, hey, I'm facing this obstacle. I already tried a couple of things. Can you maybe steer me in the right direction? But don't make my homework for me. You need to do your own homework. And that is the key right there. I need to rely on someone else. Again, same thing goes hand in hand right there. Stop relying on anyone else besides yourself. I need to learn all over again a new strategy, probably. No, please don't do that because you're wasting a lot of time. I wasted too much time. Let me tell you a funny story. I was actually profitable with my first trading plan that I ever used. I passed an FTMO challenge with the first trading plan that I ever used. And I blew the account the next week. After I blew the account, because I was just bad at trading overall, I had no idea what I was doing. I first did not understand the mandatory losing curve. Next to that, I immediately went into social media, into YouTube, and thinking, what did I do wrong? I'm missing a secret. I am missing a special concept right there, which is simply not out there. And once I realized that finally, and eventually after wasting a lot of time, eventually I got profitable. You need to face your obstacles, not learn a new strategy, which is very important to note as well. If you are looking to change things up, never change the core of your strategy. If you are changing things because of data, then you need a good sample size. A good sample size, maybe 100 trade sample size, to actually effectively trade something in your trading plan. Otherwise, do the same thing over and over and over and over again and face your obstacles. From obstacles, we see the blueprint again. And in the blueprint, we see we are moving on to funding phase. So where the money comes in, well, potentially, of course. Then right here in the funding phase, in the Notion, we see it's not rocket science. And if you've overcome all the obstacles thus far, then you have already come a long, long way, where the funding is simply an easy math equation. And what I mean with that is what I'll show you right here. When you approach funding, there's two ways to approach it. There's an aggressive approach, which you might notice a lot of mentors, a lot of influencers on Twitter, Instagram, YouTube use that aggressive approach. It's good for business. It's also good if you are already in a good financial situation and that time is too valuable to waste on passing that challenge. That is when you can have an aggressive approach. And an aggressive approach right here is a high risk approach. So for example, I open up a challenge and I risk 4% on that challenge right there to either pass it immediately or to lose it immediately, because that time is very valuable to me. This is when you have likely already gone through the calm approach. And the calm approach right here is, I would argue, where every trader starts, unless you're in a very luxury position and you immediately start from the aggressive approach. This is most likely where you start. The calm approach, a lot of focus on risk management. So the further in drawdown, the lower your risk, where below original balance, you 0 to 5% risk, even 0 to 25% risk when you are below 4%, for example, and slowly building your way back up. This takes time. It takes time and it's very boring. Drawdown is extremely boring. It's extremely boring to trade out of drawdown, but it's necessary. If you are taking the calm approach, you likely are in a financial position where you cannot allow yourself to blow challenges constantly, which is perfectly fine. Everyone starts there most likely, which after this, when you get the hang of it, you start passing challenges, you can take the aggressive approach right there where you can up your risk a lot and you can have the high risk approach. Now, I would love for you to choose one right here, the aggressive or the calm one, depending mainly on your financial position. And right there, write down your risk management approach. Again, the more in drawdown you go, the lower your risk, which is different from the aggressive approach right there. These are interchangeable, right? You can switch between them constantly as well. It's very important to understand that with an aggressive approach, you also need to remind yourself that trading is about learning a skill set. So sometimes challenges are seen as gambling, where you just take an 8% trade right there, you either pass it or blow it, you move on to the next one, you do not care. And if you do that also for payouts, etc., then you are losing sight of the skill set that you are actually learning, because then it turns into gambling, where, for example, worst case scenario, if prop firms fall away and you are on your own right there, you are on your own capital, then you can't gamble your account away. Then I hope you have learned the skill set of actually managing an account properly as well, which is, again, very important. Never lose sight of that, which great skill set is learned through the calm method actually. But once you pass a challenge, doesn't matter, aggressive or calm manner, we look at the cycle. And the cycle right here is you buy a challenge, you pass a challenge, aggressive or calm, depending on your position. Again, we can switch that later on as well. After step 2, we move to step 3. And step 3 is get the refund. Get the refund. Your first payout doesn't need to be a 10% payout. Your first payout can be as little as possible, depending on what the prop firm actually allows before they pay out, before they give you the refund as well. but make sure you secure that refund. Because especially when you're taking the calm approach, and of course also the aggressive approach, that refund allows you to reinvest into a new challenge, essentially making it a full-on business. Where the business is making money, you reinvest the money from the business back into the business, leading to more capital, leading to more money from you. So step 4 is start back at step 1. That right there is a cycle, and the cycle again can be used for prop firms, for Forex, but also for futures, right? If you are not looking to take the route of prop firms, then that's also perfectly fine. Build a track record, for example. There are some tools out there where you can easily build a track record as well. You can also trade your own capital if you do want to do that. I would advise to look at prop firms as a leverage. Leverage it, but don't rely on it. And with leverage, it's a very easy way, of course, to pay a certain amount of money to get a lot of more money. So it's a great leverage for your money. But if prop firms go away and you spend all your money on, I don't know, cars, watches, and all your money is gone, you don't have investors lining up for you, you don't have any personal capital to trade with, and prop firms, worst case scenario, completely fall out and are completely gone, you basically lost your job. So also keep that in mind. Build that skill set, but also keep something on the back end. Very important. You never know what happens. Then the inverted thinking right here, of course, very important as well. For your first challenge, buy the most expensive one. If you want to fail, then that is definitely something you should do right there. I can guarantee you that, because the FTMO challenge I bought actually was a 50K account. Instead of looking at a 25K account or even 10K account, I bought a 50K account. I thought I was going to be a millionaire overnight. Come on. Now, for futures, this is actually a little bit different. Where Forex, I would argue, buy the cheapest account. Futures go a little bit in between, because futures, the risk is a little bit different. Where if you're using a 25K account, the risk management also becomes a little bit more difficult. So go for 50K, 100K account, something like that. Make sure to not pay attention to your risk management if you can't afford another challenge. Realistically, you can't blow an account if you take the calm approach. Realistically, it will take you maybe a couple of years if you truly stick to your trading plan and you stick to your risk management. But people don't stick to their trading plan, don't stick to their risk management, blowing the account. So pay attention to your risk management if you cannot afford to buy another challenge immediately. Very important. Go for 10% in your first payout attempt. Best thing to do, of course. Go for the highest amount you can achieve. Go for the leaderboard even, right there. No. Again, get maybe 1%. If that is required to get the refund, to get the payout, go for 1%. Go for the minimal amount right there to secure the payout and secure the refund as well. Regarding the prop firm that you want to choose, I am not going to recommend you any prop firm. I want you to do your own due diligence and not rely on me to choose a prop firm for you. I can only tell you, stick to the more known ones that have been here for a longer period of time, that have been paying out, etc. Will there always be a negative story about a prop firm? Yes. But how does a prop firm handle the negative story? That's important. Where sometimes I see payout denials. Well, first I see payout denials where people, when they see a tweet like that, they already believe one side of the story and never hear about the other side of the story. Listen to both sides of the stories right there. And if the prop firm handles it very well, then that's a great sign for a prop firm actually, where they learn from the mistakes they potentially have made. So they likely won't make this mistake again. Same as in your trading. If you learn from the mistake, you will likely not make the same mistake again. Same for prop firms. Give them a chance to better themselves. Don't believe every simple accusation that you see out there. Do your own due diligence. Very important. Then from the funding phase, we slide into the last one. Well, not actually the last one, because if you've made it this far, then you're in for a great surprise. We move on to maintain right here. How do we actually maintain the trading skill? Well, you learn from yourself. Don't change a winning team. Be stubborn. Be very stubborn. You know best. Be your own hero. Your mentor should never be your hero. It's your mentor. Respect him, respect her, should not be your hero. At this level, when you are maintaining and you are not learning anymore, at least you're not learning from an outside source. You're always learning from yourself when you are maintaining, learning from your experience, learning from your deep work sessions. Then Your mentor sort of becomes a respected friend. You do not necessarily take advice from him or her. You do not necessarily ask for advice anymore, but you do respect that person still. This is also what I would love for you to do. And this is definitely a very important step because you need to learn from yourself. Start learning to learn from yourself at the earliest stage possible. Then I have 3 things to talk about: setbacks, topics, and inverted thinking again. First, let's go over setbacks. There will always be setbacks and you're never free of those setbacks. You might lose an account, you might blow an account still. That's completely normal. They are again obstacles that you will face, you will eventually overcome, and then you will learn and be better again. Never change the core of the strategy. If you do that, then you are in for a disaster because then you are going to start back at the information phase again, basically throwing away all the progress you had. And the worst part is that time is finite. So we do not have 500 years on this earth. And even if we have 500 years, then still, I would want to be profitable. Well, not as fast as possible. It's not a get rich quick, but I ideally want it to be the most efficient route, meaning I do not want to be in an endless shiny object syndrome cycle. So never change the core of your strategy because that will end up in a disaster. Never change a winning team. Refine a winning team. We could argue yes, but as long as it doesn't change the core of strategy. And what I mean with the core of strategy, I love fair value gaps and my core of my strategy is fair value gaps. So if I all of a sudden change that to now, I don't know, order blocks, that doesn't make a lot of sense. Then I will start all over again. This is not what I want to do. So for setbacks, you can again use the same obstacle journey in this notion again. Then right here, we need to go over topics. And topics is very important because you can't get lazy in this game that we call trading. Because we are always evolving in a way. And you might have heard that the market is always evolving, always doing something different. And I used to actually get quite scared of this because when people told me that, I was like, so you're telling me I always need to learn a new strategy all over again? You just need to keep on doing the deep work sessions and the case study that you have been doing from the own topics that you come up with. So in your trading, you will come up with a lot of topics. Or for example, a topic that I come up with a lot of times is, in what situation do I only need a sharp turn? That is a question that I come up with. That is a topic in itself that I can write down here, sharp turn right there, and I can study that. I can do deep work sessions on that, and that is how I improve, through learning from myself again, through just me and the chart and just learning, just me and my Minecraft music and just learning. This is also how you maintain. And I've specifically not added journaling into this and not added data or anything into this because I do not think that just from journaling and writing down your trades that you actually took benefits you a lot. I think looking at the losses and both winners and seeing what you can learn from both of those by doing deep work sessions and case studies, that's truly when you learn the most. Of course, I said journaling, you don't learn a lot. Of course, you learn a lot. Yes, deep work sessions, case studies, you learn the most. You make the most amount of progress that you can think of. So whilst you are trading in any topic that comes to mind that you want to dive deeper into, don't look for a social media video or anything to learn from. Learn from the chart itself. Learn from yourself. And again, I can understand overall in the world, knowledge is very valuable, right? As in learning from other people is very valuable. But learn from people when you don't know anything about it. Because if you want to, for example, stand out in the crowd, do you want to do what everyone else does, making you just a copy of everyone else? Or do you want to be a trendsetter? There can only be a limited amount of people profitable. Well, every person, well, almost every person can be profitable in trading. But all these things that we talked about is what is holding you back. That is exactly what's holding you back. So after the topics, again, we move on to the inverted thinking, the last one, I promise you. Right here, we see, stop doing deep work sessions. If you want to fail, you definitely need to stop doing that. And actually, this was a huge topic for myself. About 1.5 years ago, something like that, I stopped studying, I stopped doing deep work sessions. All of a sudden, I saw my trading decline. I saw my trading performance decline a lot. And I was wondering, what am I doing? Well, I simply got lazy. So I did the second thing and the first thing. I got lazy where I stopped doing deep work sessions. I stopped learning from myself. which is very detrimental. You would never want to do that. Very important. Don't reinvest your money. So keep the money to yourself, or at least spend it on, I don't know, watches, some kind of liability, a nice car. Of course, treat yourself, right? Treat yourself. Very important as well. But save some money to reinvest into the business if we want to exponentially grow. That's very important. Next thing, which goes hand in hand with the first two that we talked about, stop improving. And when you are not improving, you are not standing still. You are declining, because the rest of the traders is catching up and you are declining actually. So improving is maintaining. Very important. Doing this through case studies, again, deep work sessions, always studying if you do have the time. Through your forecast, you will also see, if you do forecasts, if you do any journaling, you will see that slowly you will start notice new things as well. That is already improving. Don't stand still. Change your trading plan. Again, very important. I've gone over this a lot of times in this video, and I think the message is clear. Don't suddenly change your trading plan, especially in the maintaining stage. There's no reason for it because you got very far. So stick to it. There are just obstacles that you need to overcome to become better as well. Then we have gone over the full blueprint. Well, we actually have one thing to go over right here, which is the question mark. And the question mark right there is a giveaway. Win a lifetime spot in the masterclass. Go to this link right there, which will take you to the website right here, where you can leave behind your email right there, and we will pick out the winner, which will be randomly chosen. Again, we do this completely in a fair way, so it will be completely random, and it will be announced right here on the Saturday, 2nd of March, right there, 8:30 a.m. New York local time, at the next video as well. All right, so that is the video right here that we end market mastery with. Again, all the concepts that were mentioned in this particular video, so the buys, etc., it's all on the channel right here. That's all on YouTube. So you don't need the mentorship right there. It's just a shortcut. But if you want to take the free route, that's completely up to you, and that's completely fine. You don't need to pay for anything. Extremely important to understand. I just want to warn you for the obstacles that you will face in your trading. And again, it's not rocket science. It is truly not rocket science. It's usually a very simple process, but not easy, because overcoming those obstacles is just not easy. So prepare yourself for that. If you need my help with anything, then feel free to let me know. If you have feedback on any of the videos, then also feel free to let me know so I can improve. And then I hope you will reach that profitability sooner or later. All right, perfect. Thank you.